In this video, let's talk about Megaport, and as usual, I'll wrap up the video with a portfolio update. As of recording this video, the next US president is already selected, so I'll provide a bit of commentary around what I am expecting over the next couple of months. Just for your information, the number on the top left-hand corner of all my thumbnails is what my portfolio is worth as of recording this video. And no, it's not going up because I'm a gangster investor, it's just because I live like I'm broke and I try to contribute as much as I possibly can. But me investing heavily during the market crash have certainly helped me as well, and I'm only reaping the benefits now. I am not a professional, and this video is by no means any form of financial advice or recommendation to do anything. It's purely for entertainment, and the only thing I'm qualified to recommend is for you to gently smash a like button right there. So without further ado, let's go! For transparency's sake, I don't have a position in this company. And like all my videos, I'll talk about how they make money, their financials, and something that's very interesting that I found. The first question, and probably the most commonly asked question, is what the f does Megaport do? You see, Megaport in its simplest form is a networking as a service company. For a normal civilian like myself, there's really not a need for me to have a direct connection to a cloud provider or with multiple cloud providers. Public internet connection is more than enough for me to
watch my own videos on YouTube
or go on incognito to watch videos I'm not supposed to do. Jokes aside, for multinational companies who are sending very sensitive data across the world, you can't rely on public internet connections. Because during transit, those data packets can be intercepted, and that's a major security concern. Because of that, and not to mention a bunch of other reasons like reliability of the connection and also the speed, cloud providers like AWS and Microsoft Azure have invested in their own infrastructure to connect directly with their own servers across the world. The problem is AWS can connect to an AWS service, but what if I have half my dataset in Microsoft Azure and I have the other half in AWS? The ability to connect directly and securely to multiple cloud providers, regardless of the geographic location, is why enterprise customers are paying Megaport. As a matter of fact, the majority of enterprise cloud strategy today involves multi-cloud providers. I don't really anticipate that to change anytime soon. This is part of Zulik's digital transformation initiative, where they have migrated majority of their systems into an Azure cloud environment, and their next-gen applications are actually run on AWS via a Megaport connection. You pay for your ability to connect to multiple cloud providers on a monthly basis, and that's essentially how Megaport makes money. If you actually use Megaport products at work, let me know what your experience is in the comment section below. As you would expect, Megaport is an ASX growth company and possibly one of our tech darlings in the future. So it's pretty normal to see double-digit growth all around. For me personally, I pay a lot of attention to monthly recurring revenue, total number of customers, and also total installed data centers, because the number of customers drive MRR growth, and installed data centers will ultimately expand how much services the customers will consume in the future. Their gross margins have improved by 17% and normalized EBITDA have improved by 19% from FY19 to FY20, which is great to see. On top of that, it's pretty evident that as customers stay with Megaport, each year they are actually spending more and more money. And as you can see, this is one cohort, this is another cohort, and as the year progresses, it seems like the minimum amount of spend in the first year is growing quite substantially too. And I think another really good metric to keep an eye on, especially for software companies, is the average revenue per customer, and that have expanded 27% compared to the previous year, which is also really good to see. Now, normally with software companies, I also scrutinize their retention rate and also how much their existing customers have contributed to their monthly recurring revenue growth. Megaport unfortunately does not report a retention rate, which is a bummer, but I think you'd be really interested with what I found when I dug into the numbers. We already know that Megaport's revenue is growing and their gross margin is improving, but still, their operating margin is negative 76%. Just to be fair, Megaport CEO did say in a recent interview that they are aiming for a positive EBITDA in June 2021, so we'll see how that goes. What's really interesting is Megaport's sales efficiency. Sales efficiency is essentially the gross profit return from a company's sales and marketing spend from the previous year. Keep in mind that these numbers are just my estimates only, since Megaport reports marketing expense, but they don't report what percentage of employee expense are sales related. So in order to estimate the percentage of employee expenses that's sales related, I went on LinkedIn, I essentially looked at how many job titles is sales or business development related, and then I used that to divide by the total amount of employees in Megaport. And at the end, I am estimating that approximately 40% of employee expenses are actually sales related. So if I add the percentage of employee expenses that's sales related and also their marketing expense, this is their total sales and marketing expense for that financial year. And then in order for me to get the sales efficiency, what I will have to do is I'll have to use the sales and marketing expense from the previous year and use the current financial year's gross profit divided by that, and I will essentially get $2.47. So what that tells me is that every sales and marketing dollar that was spent from the previous year actually generated $2.47 worth of gross profit in FY20. The next metric I want to draw your attention to is the customer acquisition cost. And what this metric essentially tells you is that how much is Megaport paying per new customer. And in order to calculate that, again, it's just estimates, so it could be more or less in reality. All I did is to take the total sales and marketing expense divided by the new customers that Megaport got for that year. And it turns out that Megaport is spending approximately $46,000 per new customer. Now, before you freak out, it's perfectly normal to pay so much for an enterprise customer because they're paying you $3,000 per month. If they are paying you $3,000 per month, you will actually get your customer acquisition cost back in 15 months. And the general rule of thumb when it comes to payback period is you want something below 15 months. Let me explain why. The problem is that the longer the payback period, the more at risk is the company. What if the customer jumps ship and no longer uses Megaport? All of that money that you spent on acquiring a new customer would have went down the drains. So you want the payback period to be as low as it possibly can be so that you can recoup the customer acquisition cost faster and then spend that money to go acquire new customers.
Yeah, okay, cool story, bro. But how does Megaport stack up to other tech companies in the ASX?
That is where things get even more interesting. When you're evaluating software companies, there's a guiding principle called Rule of 40, and it says that a SaaS company's revenue growth plus their profit margin needs to be greater than 40%. It's not a be or end all, but it's generally used to filter out companies that is going to create lasting value. So I took the top 10 companies in the ASX All Tech Index plus a few others that I find really interesting to see how Megaport stack up against them in the Rule of 40. And the bubbles that are red essentially means that the Rule of 40 percentage is actually less than 20. Green means that the Rule of 40 percentage is greater than 40, and then blue is between 20% to 40%. And the size of the bubble is essentially their market cap. So the bigger the bubble, the bigger the market cap. Now, if you take a look at Megaport, which is right here, you can see that while the revenue growth is off the charts, their operating margins are letting them down. And that have created a very low Rule of 40 score. And of course, Afterpay's revenue growth is so off the charts that it makes up for the negative operating margins. But a very interesting area is the blue and green bubbles in this quadrant right here. You can see that the revenue growth is by no means small, but they carry a great operating margin. If we take the Rule of 40 a step further and plot it against a company's EV sales, which is a valuation metric, the story gets even more interesting. So if you look here, Megaport already don't have a good Rule of 40 score, yet they are trading at an above average EV sales. Just because Megaport have a high valuation, it doesn't necessarily mean that it's bad. For a higher quality company, the market is going to pay top dollar for it. That's why it's really important for you to do your own due diligence to make sure that this indeed is a high quality company. On the other hand, you have Promedicus, which have a great Rule of 40 score, but the market wants top dollar for it, which is understandable. So if I use the Rule of 40 score, Megaport wouldn't even be on this list. But with $167 million of cash, a great sales efficiency and improvement in both gross margins and also monthly recurring revenue per customer, Megaport could be another ASX tech darling in the making. So what do you think? Am I being overly harsh here? As of recording this video, it's official that Joe Biden will be the next US president, and we'll have our first ever female US Vice President, Kamala Harris. The previous US president is not going to back off willingly. So this might get dragged out a bit. But what I'm more interested in is US agreeing on a plan to move forward, whether that's a stimulus, another lockdown, or a vaccine. Until that's addressed, I don't think the market can get on the right path towards sustainable growth. Now, before I do a portfolio update, if you want access to my video script and also be part of my fortnightly Q&A, not to mention some additional content pieces, consider supporting this channel via Patreon. Now, I'll leave a link in the description box below for anyone who's interested, but nevertheless, it already means the world that you're watching this video. So thank you very much, and let's jump into a portfolio update. With my CMC market portfolio side of things, it's currently worth a little bit more than 64,000 Australian dollars. To be honest, not much have happened since last week, other than the fact that my US positions like VTS and also AMD have recovered, and Talga went on a super hot streak. Frankly speaking, I think Talga is running a bit too hot, even though the UK grant and also the mining partner is major news. I'll do an update video on Talga in the future. With my US portfolio, it's currently worth a little bit more than 19,000 US dollars, which is give or take approximately 27,000 Australian dollars. I didn't make any changes over the last week for my US portfolio. The main reason for that is just it's been such a roller coaster ride for the last couple of days of the election. And I wanted to make sure that I focus on learning during this period. I do have a couple new US stocks on my watch list. And if you have any US stocks that you'd like me to cover in the future, let me know in the comment section below. And no, I'm not sponsored by Stake. It's just easy and more affordable for me to invest in US stocks via Stake. So if you want to try it for yourself and wouldn't mind getting a free stock when you do try Stake, I'll leave a link in the description box below. So thank you so much for watching this video all the way to the end. If you have learned something new, consider gently smashing that like button right there, subscribe to my channel and click onto the bell so that when I release future videos, you'll be the first one to know. Until next time, my name is David, and Otto will always do the honors and see you very, very soon.